This is my financial disclaimer so I don't get sued.
Good morning, good evening, good whatever time it is you're listening to this. I hope you're having a good one. Let's take a look at what we're covering in today's video. In this video, I'll be going over some of the things I use for scalping trades, and this can be equities, options, bonds, literally anything you want. It's just you have to use the same indicators that I'm talking about, and you have to use the same rules. Um, with that said, we're going to be going over how to set your day up, how to identify structures and channels, how to apply technicals to your trades to really create great setups, and how to set rules for yourself. So, this is going to be not so much of a structured video. This is going to be kind of how I run my day. So, if I were to wake up in the morning, do the exact same scalp, each and every day, this is kind of my process for doing that. I will make more in-depth videos going over this, but this is just a very, very brief and basic idea to get people started because I know many people have been asking about how to scalp properly, and there are a lot of rules. You can't just look at candles, you can't just look at very, very basic things that a lot of people tell you to look at. So here's what I do. Um, with that said, let's go ahead and jump straight into it. The first thing to really set up our day is to look at the data, and for this I use investing.com. I check the tier 2 or tier 3 expected volatility events because that's generally going to cover anything that's very, very crucial. Now, I check these time slots and see if this is something that's going to happen during the actual intraday. So, for example, we have Bostic speaking on Monday at 12:30 p.m. So, if I'm trading, if I'm doing any sort of scalps, if I'm expecting any sort of volatility from this event, then I need to prepare for that within my scalping during my trades. So come 12 o'clock, 12:15, 12:20, I need to be ready for this data set because it will affect the market. And by that, it means that it will either drop the price, it will keep the price similar, or it will raise the price. And as simple as that is, it's going to cause an outcome, whether that outcome is something you want or not. So you have to be prepared for it. Now, when we're going over data sets, we have to try our best to not be biased. Um, if you don't know what the data set's going to do, if you don't know how the market is going to react to it, then don't scalp during that time. Okay? Learn how these data sets work. Learn which ones cause major volatility, which ones don't. It seems like a lot to learn, but do this for 2, 3, 4 months, and you'll be understanding a lot of these data sets. Um, how I like to do it is I like to break the day into time frames. So, for example, looking at this Tuesday, we have major data coming out at 8:30, and we have major data coming out at 10 a.m. So, granted, 8:30 is not during the intraday, but pretending it is, then I would want to prepare my trades for the CPI. Well, the CPI is a major data set. It generally causes volatility, and that can mean the price is going to push upward quite high or push downward quite low, very, very quickly. Um, Generally, CPI does not cause just a neutral reaction. So, with that said, whether I'm bullish or bearish, I need to be very, very aware of this time slot. Going into the 10 a.m. time slot, we have the new home sales. Now, is this something that generally is going to move the market a lot? In my experience, no, not at all. So, am I safe to be scalping during these moments and not expect huge volatility from this data set dropping? Correct. I can trade during this moment and not expect a massive, massive shift. And that's really what we're trying to do here is we're trying to determine during the day what's going to happen. Are we going to have a road that's going just straight, or are we going to have to turn left, right, the data sets? Are we going to have to pay attention to different times, things like that? Another part of this is earnings. Another part of this is presidential speeches, world events, anything that can cause a fluctuation within the price, you really need to be aware of. Granted, not everything is planned, so you can only plan your day out so well. Generally, my days is very, very planned out from the beginning to end, unless something pops up that I had no knowledge of. What that means is each of these data sets, I have a set expectation of what I expect the market to do, what I expect the market to not do. If the market does what I expect not to happen, then how am I going to navigate my trade? So keep that in mind for each and every session. Each and every session is going to be different. One CPI data set can be really good for the market. The next CPI data set could be very, very bad for the market. So play the day as it comes and play as the structure, is really showing the trades. And this is going to be the next part we get into for structuring our days is how to identify structures.
If you're enjoying this, please check out my Patreon. For just $1 a month, you can join our community chat and access our tools like the Unusual Whale Spot and our own personal GEX and DEX market positioning. My $12.99 premium tier gives access to my personal trades, 2 live classes a week, which are on Wednesdays and Sundays, and direct support from myself. The links to join are below, but you can also join through patreon.com/wooksy. Thank you for supporting me to help you build skills for a lifetime.
And this is the next part of how I set my day up. And I do believe I have some drawings on here, which I will delete because they are irrelevant for this lesson. Now, this is the daily time frame, and we're going to just pull up all of our moving averages, Bollingers, the MACD, the ADL, and just really dig into this. So when I am looking at a trading day, I'm looking to see if any of the moving averages are close to the price action. So the price on QQQ here is at 626. Do we have any of the moving averages near 626? We have the 5 mile. The 5 mile is at 622.51. So if we see a move down in the price action during the day, what's the expected level I could expect? That 5 mile. It's the closest level, and the upside would be the upper Bollinger. So use the moving averages to your advantage. Again, the 5 mile moving average is tested once every 5 days, generally. The 10 mile once every 10 days, 20 mile once every 20 days. And you can use these like clocks. So if you see the price action drifting away from the 5 mile, then you can heavily assume that the 5 mile is tested once every 5 sessions, if not more. Then the price will very, very likely pull back to that or continue to see the further push away from that price. But we always use our closest moving average. So again, that's going to be the 5 mile. That's the 5 day moving average. It only takes 5 trading days to move anywhere the price action could go. So if the price action dropped to literally a penny, it would take 5 days from the top of the spot or top of QQQ to drop all the way down to a penny. Okay. Um, Using these moving averages are very, very key price targets, and same with the upper Bollingers. And this is not understanding the mechanics of it or anything. This is just watching the actual Bollingers and the moving averages. So, seeing how we're entering today essentially with the 5 mod 622, that means that the upper bound of that 5 mile is going to be around the 624. So if we see the price action start drifting toward that 624 range, what can I expect? Either I can expect an upward bounce from that 5 mile, or we're going to see a pull into that 5 mile. Going into the 5 minute chart, and I want to ensure that I am showing you all this properly. Um, so I said the 5 mile on QQQ is at 622.50. For this session, it was at 619. I want to say 619.70. So we see beginning of the day start to pull down to that 619 range. What does that tell us? That potentially we're going to have a 5 mod test here. Now, there's another very, very key indicator, and I'll be going over that in just a second here. But with us seeing that potentially we're in that range that we're going to have a 5 mod test, what does that mean? That means that either I can expect an upward bounce or a downward push. Okay. Now, we have other tools to watch as well to determine if this is going to see buying or selling from this level. So I'm going to scroll this all the way to the right just to kind of ask some of the days trading. Um, but when we're here, what's something that we notice? We notice that the lower Bollinger has been pushed into on the 5 minute chart. Now, when the 5 minute upper or lower Bollinger is pushed into, this is a very, very, very ideal time to take a contract for the opposite side. If we're seeing the lower Bollinger pushed into on the 5 minute time frame, this is one of the best times to take a call because that's heavily telling you that this is extended to the downside. Um, over its level because again, once you push out of the Bollingers, that's essentially telling you you're pushing off the road. Um, the price action wants to get back on the road again. So buying from below the lower Bollinger is extremely strong for an upside scalp. Now, if you bought this first one, you would have had a little trouble here. You would have pulled up to that 20 mile. And again, this is the 20 mile on the 5 minute chart, not the daily chart. Be very, very clear with that. This is the 20 mile on the 5 minute chart. And I'm actually going to hide the moving averages and we're just going to call that the middle Bollinger because that's what we're going to be paying attention to. When we're scalping, we have three super, super critical ranges to be aware of. And this is outside of Bollingers, moving averages, anything else. Just within the 5 minute chart, you have the 5 minute Bollinger Bands. Okay, you have the upper Bollinger, you have the middle Bollinger, and the lower Bollinger. If you go above the upper Bollinger, the massive, massive, massive expectation will be that you're going to pull to that middle Bollinger. Okay, every time you see this price action start pulling up towards that upper Bollinger, you see it pull down to that 20 mile. Same with the lower Bollinger. Once we get to that lower Bollinger and below it, we start seeing the price gravitating to that 20 mile. Now, generally, you're not going to see it sitting at that 20 mile the entire session, but this is telling you if the price is going to be bearish or bullish. If you're above this 20 mile, then you're going to be bearish. You're going to be seeing buying very, very likely. If you're below this 20 mile, you're going to be very, very likely selling. And again, we're using many tools at the same time. So while we're checking our data sets and setting up our day and ensuring that there was the 5 mile, the daily 5 mile at the 619.70 range, that if we see buying from that range, where's that very, very likely going to take us? Probably to what's above it, which is the upper Bollinger. So I took calls at that range. Um, this is the range that I took calls on Friday. And I wrote it all the way up to about this range right in here, because once we start getting towards the upper Bollinger and start, it's not exactly a rejection, but it looks like a rejection because remember, we don't have hindsight to work with at the time. This looks like it could start pulling back down towards that 20 mile. That's when I sold those contracts and I actually made quite a lot of money off that move. That was a from 619-ish all the way to 626. So that was a $7 move almost on QQQ. It was an absolutely incredible move. Now, what is another tool that I really, really, really like to use? That is the ADL. That tells us exactly if there's money flowing in or out of the fund. Now, when we saw the price open, we saw it pull down very, very aggressively to that 619.84. However, all of a sudden we see the ADL start flaring back up. Okay, we see it flaring back up, and then we see another rejection at the 20 mile. From that rejection, we go all the way back down to the lower Bollinger. Now, from that lower Bollinger, again, this could tell you that potentially we're going to see continuation here. However, we're seeing a few signs starting to happen at this point. We're seeing the 5 minute MACD starting to pull upward. As you can see, the candles within the actual MACD are starting to taper to the upside. So that's telling us that very, very likely this selling is starting to taper out. We're seeing the ADL starting to pull upward from once we hit the very, very bottom of that candle, it just starts shooting back upward. That's telling you money is flowing into this thing. There's a lot of money flowing into this thing right now. Seeing a little bit of pullback, seeing the 5 mile or the 5 minute MACD starting to taper on the buying side. We saw this upper Bollinger hit. So from the lower Bollinger to the upper Bollinger, that was a $6 move within the span of 10, 15 minutes, something like that. Not a very long period of time at all. From that upper Bollinger, that would have been a very, very easy time to cut that scalp off. That would have been extremely safe scalp. Now we get back to the middle Bollinger again, and that's the test range. Remember that middle Bollinger is really the battle range. That's where all the decisions are going to be made during the day. We then see money start just piling in towards this. And what does that mean? It means likely some of these cups toward the upside are starting to get filled out again. Now, what is this actually creating on the daily time frame? Or not the daily time frame, but on our time frame. Anyway, this is creating buying. Now, I have a little bit of content in how I draw my channels and how I determine buying channels. During an intraday session, it is not the easiest thing to determine because generally you need two supports on the bottom to really build a buying channel off of. However, what we could have built was a selling channel. And off of this selling channel, we see that once we started to break with the ADL pulling upward, it broke right out of that selling channel. And from that selling channel, we just see buying, 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 buying until we finally start tapering out towards the end of the day. So, learning these buying and selling channels are very, very crucial. And I'm unfortunately not going to be going over that in this video. I do believe I have a video on the channel right now that covers this. If not, then I will be putting one up fairly soon. Um, but learn if your day is going to be a buying day or a selling day. Now, going back to the very, very beginning of that trading session, what's another tool that we can use that I bring up all the time? It's the VVIX, and we're going to go over the 5 minute time frame. I want to make sure we're actually trading session, so it started right there. Okay, so I want to pull back towards that. So we start seeing the VIX or the VVIX, and it essentially opened towards that 91 range. The high of the day was actually 91.08. However, we see the day start opening up. We see the QQQ and the SPY start pulling down. However, while we're seeing the SPY and QQQ pulling down, what are we seeing the VVIX doing? We're seeing it absolutely dump towards the downside. What's this heavily implying? That there's going to be buying in the SPY and the QQQ. And what do we see? We enter this green range of what we talk about, the buying and selling ranges. We have again the red for the selling, yellow for the cautionary, green for the buying. Within the green range, we're seeing that buying happen directly within the QQQ and SPY. Um, that gave us that buying up to the upside. So with watching the ADL, with watching the 5 minute Bollinger, you can get some extremely safe scalps. And I said I wouldn't go over another day, but I'm just going to very, very quickly go over a trading session where the scalp wouldn't have been so good. Okay. And we started this session around here. So let's see this start opening up. We open up and almost immediately we just start dumping, dumping, dumping. Now we are starting to pull below that lower Bollinger on the 5 minute time frame. So many are going to say, okay, I want to start buying this. I'm seeing a little bit of tapering within the MACD. I'm seeing the ADL starting to taper and starting to pull up. Well, technically, buying calls at that 617.80 range would have given you a $2, $3 scalp to the upside, all the way up to that middle Bollinger. You just have to have the conviction to say, okay, I hit that middle Bollinger. I have a $200, $300 contract now that's in profit. I need to take profit on this. Now, what are some of the signals that are telling us we need to start taking profit here? Okay, so let's say we're waiting. We're waiting. We're seeing rejection. We're seeing money starting to leave. We're seeing tapering within the 5 minute act. Now, within this selling session, I want to go to the VVIX and just kind of show that. If I could pull it up because I'm blind. But we go within the VVIX and let's make sure we're on the right session. It's this session right here. And what do we see within the VVIX? We see that on the open, it starts pulling upward, It's within that cautionary zone. It's within that cautionary zone, but then it starts to pull down. Now, this is the range that I started entering some scalps into once I saw that the VVIX was pulling down. Now, however, that doesn't always translate into good price action. I can get the QQQ pulled up. Apologize, I am very blind when it comes to digging through all these symbols. And going over that session, we see how we do start pulling up within the day. Um, if we started buying some of these positions around when the VVIX started pulling into that green area, and again, this is below the 5 minute Bollinger again. This is at the 618. This would have given you a scalp all the way. If you took that first initial upper Bollinger move, again, that would have given you almost a $3, $4 upside. If you held it all the way for the second move, it would have given you a $5 or $6 upside. Um, so using these Bollingers are extremely good, and I want to see if I can find a good selling session. Here we go. Here's a really nice session to go off with. So we see the session open. We see the ADL pulling upward. However, what's something we're seeing here? We're seeing our MACD tapering. Our MACD is still tapering, even though we're seeing the price pulling up, but we're seeing tapering within the ADL too. We're seeing a lot of tapering now. We see that pull down from the upper Bollinger to the middle Bollinger. We see the MACD actually cross. So we see the MACD and the signal cross. The signal crossing above the MACD generally shows bearishness. We're seeing the ADL still showing that things are a little iffy in here. Not exactly selling yet. We're seeing a little bit of buying, but it's a little iffy. Starting to go upward a little bit more. We're seeing the MACD starting to pull back up again. We're seeing the signal crossing below. However, we still haven't had a buy or sell entry yet. We've only had that single entry at the very top, which we could have exited at the 623. That would have been a $2 move, basically a $1.20 move to the downside. So not a very good scalp. But it would have been a scalp if you had the patience and everything to actually cut it at the 20 mile there. But we still don't have an entry yet. We still don't have an entry. We're just seeing this price action moving up, and we still don't have an entry. Now, we have the we have the MACD crossed. We have the signal above the actual MACD itself. We're having the ADL pulling down, and we're now at the 20 mile. Things are starting to look very sketchy here. I'm not seeing strong buying structure to the upside. Going over the actual channel on the day, I would be seeing tapering here. And this would be heavily concerning to me. And I guarantee you, if I pulled up the VVIX, you'd be seeing tapering within the VVIX towards the upside as well. Continuing to see it pulled down, we see it finally cross into the lower Bollinger. That's telling us that things are starting to get a little bearish. However, we're seeing a little bit of upside in this ADL still. We're still seeing the MACD pulling down, but it's starting to taper again. So potentially this is starting to become a really good entry point at the 626.47. So now we see the 626.47 pull up to that middle Bollinger, basically to the 627.50. That's a $1.20 to the upside. And once we hit that point, what do we start to see here? We don't see the MACD crossing to the upside. We actually see it pulling downward further. We're seeing our ADL dropping off, and we saw our buying channel breached. This is telling us that there's some major downside coming. Okay. The ADL being a little bit tricky in here, still showing that there is some buying going into this, but obviously our price action is showing us, quite opposite of that. Now we're starting to cross, and I want to go back to here because this is when we hit the lower Bollinger again. On this lower Bollinger hit, we see a few things. We see one, the ADL stopped and is starting to pull back up. So that's telling us a signal that, okay, potentially this could be a very good scalp again. This could be a whole nother $1.20 plus to the upside if we have the patience to take the middle Bollinger. Now, let's keep going. We're seeing our MACD starting to pull up. Are we going to see a cross? We're starting to see some good signals. We're starting to see not continued selling. We're starting to see our MACD starting to cross. We see the MACD actually cross the signal here, just barely, just briefly, but it's crossing. We're seeing the ADL continue pulling up almost to the day's high. So this is telling us this is probably going to be a very good buying range. Let's continue. And let's see if we gap up tomorrow. This is still the overnight, gap down into the overnight. And that's absolutely fine. That's just continuing out that structure. And how we know this is actually continuing out this structure is, again, continuing with our selling channel. And I'm going to go from that, that, up at the top, and this will adjust slightly. But seeing how throughout the overnight, you can continue to chart that, and that would give you almost an exact selling channel on that day, moving into the next session. So this is, again, setting up the session. We enter this next session, we have a selling channel set up. So now we know that if we start seeing buying to the upside, potentially we're going to see this selling channel break. And what do? We see buying to the upside, we see the selling channel break, and we see all-time highs. So again, this isn't the grand how to scalp everything, but this is just teaching you how to really apply some of your tools together, how to apply some of your technicals. And I'm not going to go into Fibonacci's or anything in this video. This is just a very, very, very basic, okay, using the Bollingers, using the MACD, and using the ADL, along with our daily moving averages and Bollingers. Again, those are very, very key levels. With the daily ADL, daily MACD can give us very good signals, along with using the BVIX, along with using what data sets we have coming during the session. It can tell us a lot of signals. Now, again, I will add on to this scalping video. I don't even know what to call it. It's not really a guide, it's just me talking, but this is how I consistently scalp. Um, I don't have the exact win rate right now, but I know that my scalping win rate is easily above 68% last I checked. And that may not seem great in the grand scheme of things, but remember, I've done thousands of scalps. Some trading sessions I'll do 20 or 30 different trades. So this is literally thousands of trades of experience talking to you that have seen successful, quality, massive trades to the upside or downside. This again applies to both sides. You just have to follow your rules, which again, you start the day, you set your day up, you check your data sets, you check your moving averages. Are we close to anything? Is there anything we're going to gravitate to? Is there anything we're going to push off of? The money flow. Are we seeing money entering into this symbol? Are we seeing money exiting this symbol? You know? Um, Checking the VVIX again is an extremely crucial signal to tell you that there's going to be buying or session on the day at the moment you are trading. It's telling you very, very directly. So this isn't gambling. When we take any form of scalps here, it has zero to do with taking a lotto. It has everything to do with, do we see bullish structure building? Do we see bear structure building? Do we see the upside actually coming in? Are we seeing money flowing into the symbol? Are we seeing the buying actually occurring? Are we seeing selling occurring? We're watching real signals by using these few indicators. So with that said, the last thing I wanted to go over in this video is set rules. One of my rules are you don't keep your contracts for a longer than an hour unless towards the end of that time frame you start seeing some major structure forming that goes towards that contract. For example, if you're in puts and you're starting to see a lot of bear structures forming, you're seeing selling within some tech symbols, you're seeing a lot of buying within the VVIX, then absolutely keep your puts going. If you see there's more room down, take the room down. However, remember, your scalps are not meant to make or break your portfolio. They're meant to be very small trades. I'll have scalps that sometimes only make me $5. I'll have scalps that have made me thousands of dollars. I do not go into a scalp looking for a home run. I go into a scalp giving or taking exactly what the day is giving to me. If I'm seeing buying within the ADL, if I'm seeing buying structures forming, if I'm seeing bullishness within the narrative, if the data sets are coming out dovish, then I want to chase that price action. And that's all you're doing here is following exactly what the price action is giving you. This has zero to do with guessing or anything of that sort. So yes, this can be truly applied to the majority of symbols. Now, the whole VVIX part, that really does apply to SPY slash tech. The VVIX specifically tracks the futures insurance. So, if you're going to be doing bonds or something, you're going to have to use a few different tools for that. But the MACD, the ADL, using our 5-minute Bollingers are extremely, extremely strong. And they're consistent. They're extremely consistent. If you lose on a scalp, it is not meant to blow your portfolio. So if you're putting that much money into a scalp, you really, really, really need to evaluate what you're doing because that's not what a scalp is made for. I do not make my account off of scalps. I make my account off of holding my equities, gaining value, and seeing growth within my equity. That's how you gain value. You do not gain value by making a little bit of money. Okay? Scalping can be done whenever there's days with high volatility, meaning large movement to the upside or downside. This is kind of why I apply the rule of you don't want to hold that contract for more than an hour because if you're going to be trading into, a choppy session without a lot of volume, without a lot of volatility, then you don't want to be trading into that. You just want to cut the contract off, take the small little loss, and wait for when things actually show up to present themselves for the move. Um, and that's really what I look for. Another thing that I kind of want to go over is just gaps. Um, for example, this is a very large selling gap down on the day. Um, And generally, I try to buy the upside or the downside of that gap. So if this is a selling gap here, then generally my goal is to find the structure to buy the upside. If I see a buying gap, then generally my goal is to see where the selling of that is going to happen. And that's a large way of how I also do my trades is seeing if there's major gaps to fill. If you see the price action moving in one way, for example, we see a ton of the early session just push, 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 and have no reprieve. Does that mean you can't just keep pushing the whole session? Of course you can, but you just have to follow your structures. During this selling session, even though it looked extremely bullish the first half, we started seeing potentially this head and shoulders forming, potentially this large inverse cup, potentially these selling structures starting to form, and that gives us the conviction that once we do get above that upper Bollinger on the 5-minute chart, that's going to very likely give us a good payoff to the downside. So just keep some of this stuff in mind. I know this is kind of a longer video than what I expected. I expected this to be a short, simple, and sweet video, but there's a lot to go over in scalping. I feel like I could probably make 20 more of these type of videos, and it would still not cover everything that you really need to look for. But if you follow these rules, you will very likely see success because I see success in doing these, and I've seen many other traders follow these exact same rules that I've set do very well. Some of them are making $10,000 a day. So with that said, if you like this video, I will be continuing to add to it. Um, Other than that, thank you for watching, and I will see you in the next one. Thank you for always supporting me, and yeah, I appreciate you all. Take care, everybody.